Hello everyone, today I'm going to give away one of my favorite custom tools for free. Please subscribe to this channel and like this video if you find this content valuable. Let's get started. In the heat of trading, when you're getting all these trade alerts, you have scanners spitting out different stock tickers constantly during the open or throughout the day. How do you know how many shares of a stock you should trade on the fly, irrespective of their stock price or its volatility? A Tesla stock price could be at $902 and could be moving $65 on an average every day, whereas Apple can be trading at $158 and moving about $6 every day. So if you want to take risk in a consistent manner suitable for your appetite, you should be able to size your position accurately on the fly, irrespective of the stock price or its volatility. So that's what we're going to achieve by building this custom tool called the Position Size Calculator. You will be able to use this calculator in your market analyzer, where once you add a ticker to the market analyzer, it will calculate the number of shares you should trade for that stock and still be in your risk parameters. This tool will take out the emotions and help you plan your trades very quickly while keeping you within your risk parameters. I will show you how to achieve this using NinjaTrader 8 trading platform. You can follow along in your favorite trading platform if it provides you with the capability to build these custom tools. You can also build this in an Excel file or Google Sheets program for free. Let's hash out the requirements that we just spoke about. So we want to calculate the position size, which would have the following requirements. The calculator should tell us how many shares to trade independent of the stock price. What I mean by that, you could punch in a ticker that is trading at $5 or something that is trading at $200 or $300, and the calculator would give you how many shares you should trade irrespective of that stock's price. It will adjust the size based on the recent volatility. Every stock will go through their dull periods where they're not moving as much, and then there will be periods when a stock will be moving a lot. What I mean by that is a stock can move on an average $5 to $6 every day, and then after a news event or changes in some fundamentals of the economy, it could start moving $15, $20 a day. So we want this calculator to take into account the recent volatility of that stock. We also want to calculate the size based on a fixed dollar risk per trade. What I mean by that is, it doesn't matter what stock I'm trading, I know that I only want to risk, let's say, $100 on any given trade. So I want the calculator to give me the number of shares I should trade for any ticker based on its recent volatility, irrespective of the stock price, and build my risk management or risk per trade into that size. On the right side, you see the code for NinjaTrader 8 platform. We're looking this code within NinjaScript editor. I will provide the link to NinjaScript code for this calculator within the description box. You can download and import the code in your platform and start using it today. Let's look at the variables we have used in this code. Our first important variable is ATR, which is average true range. What we want to do is we want to take into account the volatility of that stock. So if we use ATR for, let's say, 4 period, as you can see, which means we are only looking at the last 4 days or 4 hours or 4 5-minute periods of whatever stock we're trading. So by using a smaller period on an ATR for the stock, we can understand how volatile that stock is in the most recent period. The second variable we're using is a risk multiplier. This is something that you will provide this calculator. So this will also be one of the inputs you will be providing to the calculator. So think of risk multiplier as a stop. And the way you can define stop for your position would be how many candles, once they go against your position, you consider your position to be wrong. You would visualize your stop in number of candles. The next variable is risk per trade. As I said before, this would be a fixed dollar amount that you're willing to lose on any given trade. It has nothing to do with the type of stock you're trading, which sector it belongs to, or how big the price of that stock is. It doesn't matter. Here's what you're saying in a nutshell. I want to enter a trade and I want to be out of that trade if I lose $100. This is basic risk management, and this is how you build your risk management into every trade. So I hope you're starting to see the picture. The formula is simple and it's right here. We're talking about the position size is equal to risk amount divided by risk multiplier multiplied by ATR of X number of periods. Again, this code is available for you to download as a script, as a Ninja script, which you can import and start using right now. Every platform has a different way of coding these custom tools, so you will have to refer to your trading platform's programming guides to do so. I believe you could easily program something like this in Thinkorswim platform for TD Ameritrade. You could also program something like this very easily in TradeStation. So here on the right side, you could see the settings that would go along with this indicator. And yes, we will be building this tool as an indicator and then applying that indicator within Market Analyzer with these settings. On the right side, you could see the name of the indicator and then those three parameters or inputs for our variables, which is the period, I'm keeping it 4, risk multiplier as 2, and risk per trade as $50. And then in the data series, you have to define, do you want to apply this indicator on a minute chart and how many minutes of that chart. So data series would be the chart settings for your trading time frame. And in the setup, we are using calculate on bar close. You could make this as calculate on price change, especially if you're using a daily setting right here for the data series. Here's an example for you to visualize. We have actually added this market analyzer for Apple and Tesla. We're looking at Apple at the moment on a 60-minute chart. This is an example how you could use this tool for both intraday trading and for swing trading. So for swing trading, obviously you will be putting this tool on a daily chart, whereas your data series would have settings of daily. And for intraday size, you could be using an hourly chart or even a 5-minute chart. So your ATR settings or the 5-period ATR, as you see here, would apply to 5 days of data for swing trading, and then for intraday it will be using 5 of a 60-minute chart. So since this is Apple and we look at the column intraday size, it's recommending 21.71 shares. So always round down. That's what my personal opinion is. I would round down to 21 shares for this example. I have risk per trade set to $100 per trade. Risk multiplier is 2. Now, our habit or by nature, we want to trade a bigger size, maybe 100 shares or 50 shares that we are used to trading. And sometimes we apply that size across the board. In this example, an intraday size is recommended at 21 shares. And in this next example, we're looking at the daily chart. And as you can see, the candles are bigger on a daily chart. They have bigger ATR, and therefore it is recommending us with the same $100 risk per trade and the same multiplier to only 8 shares. Let's take another example right here. We're looking at a chart of Tesla on a 60-minute time frame. Here it would be an intraday trade example. We have same settings. ATR is 5, risk multiplier is 2, risk per trade is 100, and for Tesla, for intraday size, it is recommending us 2 shares. So if we are trading 2 shares, we'll be comfortable trading that position in an intraday environment. At this point, the price has fallen down and it has come back to its moving averages. And if you feel like this is a good place to enter short, you would enter short for 2 shares and not 5 shares, not 10 shares, or you will not be confused on the fly, how many shares should I trade? This is a great place to entry. Let me trade 10 shares. And if you do put in 10 shares, you will quickly realize if the trade starts to go against you that you have taken a bigger position than you should have. But with this tool, you will have that right in front of you as a guide, as a gauge of risk, how much size you should go for. Let's move to another example. Let's look at the swing size for Tesla. In this case, with the risk parameters that we have set up and homogeneously applied across Apple's intraday size, swing size, and Tesla's intraday size. For Tesla's swing size, it's recommending us less than 1 share. So in this case, you would think, hey, I know that this trade doesn't make sense for my portfolio or for my risk appetite. I should not really be trading Tesla for a swing trade, because the risk is just too much. This is an example of how you would use this tool in the live market, and it will guide you in different conditions. Now you can play around with the ATR size. You can make it 4, you can make it 3, you could change your risk multiplier. If you are an aggressive trader, you could make the risk multiplier to be 1. So you're just looking for 1 candle against you and you're out. Or you could give your trade more room and make the risk multiplier to be 3, which would in turn reduce the size of the number of shares if you keep the risk per trade same. So this tool automatically adjusts if you change any of the risk parameters and give you the appropriate size for you to trade. So that's our quick video on the position size calculator custom tool. This is one of the many custom tools that I use for my trading. I will be giving away another tool very soon. If you have not looked at my free trader education course so far, I would highly recommend to click the link in the description box and go check out this trading course. This course is made for anyone that wants to pursue trading as a profession. This trader education course is complete. It has 12 modules and many great resources that you need to be able to compete with today's markets. The trading environment is managed by algorithms and quantitative software. So in order to gain your edge against these companies and these computers, you need to also think like them. Within this trader education course, you will learn how to build these custom tools, how you should approach building these custom tools, and then come up with strategies that you can backtest and then trade the live market with confidence. Remember, the confidence comes from data. It doesn't come from your feelings. It doesn't come from someone else that has traded something successfully and they're sharing that with you, unless you can see the data behind the strategy that tells you that, okay, this strategy will be profitable 50% of the times, and you're risking 2 to 1, so you will end up making money. That will give you the confidence. You have to either calculate the back test on your own or should be provided with the back test for the strategy that is being taught to you. So here's my S&P 500 index based trading strategy course. This course is continuation of the free trader education course. This strategy course will educate you how to build a proper working real life trading strategy. This strategy is built on S&P 500 index, which means this strategy is very risk averse, in the sense you can make more mistakes while trading this strategy and it still would be profitable. In this course, you will learn how to take an idea about trading something and then test it over real past historical market data and see if this strategy or this idea that you have will work or not. Once you have tested it and you know that this strategy has worked previously, you could start trading that strategy in the live market. I recently added a new chapter to this strategy course. In this chapter, I have shown how to re-optimize your trading strategy once the market conditions or the trading environment changes because of maybe changes in the fundamentals. A trading environment could change because of the participants have changed, in the sense it could be a bull market and now it's a bear market, and the trading environment could change because of Fed actions. Maybe the interest rates are going up or down, or it could change because of geopolitical environment like the Ukraine war, or coronavirus is in the news again, and that could impact the market behavior. So this chapter shows you how to re-optimize your trading strategy to give you the correct signals, readjust the parameters of your trading strategy so you can achieve a profitable profit factor. Just as a recap, our reliable trading strategy that is built in this course delivers a profit factor greater than 2 that you can start using immediately. I really hope that you found some value in this content. Please like, share, and subscribe to this channel. I'm going to continue producing content that will be helpful for any outsider that wants to learn trading and be successful in this profession. I'll catch you guys later. Happy trading.